My name is Steven Schoenfeld. I'm the founder and chief investment officer of Blue Star Indexes. Blue Star maintains a family of Israeli stock indexes that define the Israeli capital markets, as well as 20 global technology indexes. Our stock indexes are tracked by 2 New York Stock Exchange listed ETFs, which we'll talk about later, and Israeli registered funds. Collectively, there's about 300 million in the funds that track our indexes, including allocations by North American Jewish endowments, foundations, Israeli pension funds, and thousands of individual investors here in the US and in Israel. Our topic today is called Scaling Out, the evolution of Israeli startups to global companies that are changing the world and are creating opportunities for investors. Israel continues to attract major levels of foreign investment and venture funding. 2019 marked another record year in both of those categories, and it capped a decade of successive increases in capital invested in the Israeli high-tech ecosystem. Israeli tech stocks delivered a 39% return last year. Equally important, Israeli technology companies are growing into global leaders in a wide range of sectors and industries, and have become both strongly performing investments for investors around the world and attractive acquisition targets. In this session, we will discuss the challenges and the opportunities in this dynamic Israeli tech ecosystem, and will provide a very diverse perspective from venture capitalists, advisors, and asset managers. The goal of this panel and the discussion that will ensue is to illuminate how Israeli firms are impacting the world and how investing in Israeli technology firms is becoming more accessible to investors. And given the growing efforts to blacklist, to boycott, and divest from Israeli companies, I will also make the case that investment in Israel is the antidote to divestment and can be another way for the pro-Israel community, our community, to support Israel, a profitable way to support Israel. So let me introduce our panel. Starting at my far left, your far right, is Mark Mordler. Mark is a managing director at Bernstein Research, and he's going to bring to us the perspective of an industry expert, particularly in the software space, and an equity researcher. And if that wasn't enough, he's also been an investor in a lot of Israeli early stage companies. Mark is a senior analyst at Bernstein covering global software. Previously, he founded a software company which was acquired by CA Technologies. He went on to become vice president for CA, so he's been on the corporate side as well. To Mark's right is Vanessa Bartram. Vanessa is managing partner of Zora Ventures, and she's going to bring us the perspective of an early stage investor watching companies scale up with an extra je ne sais quoi of focus on impact investing, but you will know what it is soon. Zora is a leading Israeli impact tech fund with the goal of multiplying its impact across the UN Sustainable Development Goals, including hunger, health, climate change, and the environment. Finally, to my immediate left is Stanley Stern, managing partner of Al Natak Capital Partners. He's going to bring us the perspective of an investment banker, an advisor, and a board member with more than 30 years of experience in the Israeli corporate and tech sector. He's been a director of numerous companies. Previously, he was chairman of the board of SodaStream through its acquisition by Pepsi. I find the acquisition of SodaStream in particular a perfect example of where we as the pro-Israel community are. Any of you sort of my age or a little older might remember that through the 80s, not till the early 90s, you couldn't even buy Pepsi in Israel because Pepsi adhered to the anti-Israel Arab boycott. And here we are 30 years later, Pepsi acquired SodaStream, which itself was a target of the BDS movement. So there's a lot to unpack in that alone, and that was the reason for my digression. Right now, Stanley is the chairman of Audio Codes, another publicly listed Israeli tech company, and on the board of Ormat, a world leader in geothermal energy that's also Israeli. He was previously an investment banker, primarily at Oppenheimer. With my background as institutional investor, I'm also going to share the perspective of endowments and foundations. All of us come from communities that have endowments, and I've done a lot of work with them about investing in Israel. So the first question we're going to address is, what are some of the metrics of Israel's success in fostering cutting-edge technology companies, and will this trend continue? Just to give you some data, I mentioned Israel produced a 39% return last year for their tech companies. We produce an index that tracks these companies, and you can now look at the data. So I'm going to address this question first to Mark on the metrics, and then we'll continue. Thanks.
So I just came back from the Our Crowd Summit, which is in Israel. It had 23,000 plus attendees from 186 countries, including all but one of the Arab League countries were in attendance. Okay, and the one that wasn't there was because they weren't allowed by their government to attend. So those that wanted to attend. So you're seeing that the belief, the expectations, the view of the Israeli economy is the creators of not just software, not just technologies, but a wide range of emerging intellectual property that the world needs. You see it in the interest by the Chinese. You see it by the interest by US tech, who have M&A teams located in Israel. One large company we know has two M&A teams. One sits in the United States, the other one sits in Israel.
You can name the company.
Microsoft. But they're not the only example of that. There are many other examples of companies in which they are highly cognizant of the level of intellectual property being created in Israel for the purposes of either partnering with or procuring or investing in, and all of the above at some point. Stanley, want to add some color to that?
Sure. I think just I'll give some, not actually raw data, but conceptual data, which is very similar to what Mark said. If you look at the Israeli investment ecosystem, particularly starting at the early, going to the mid-stage, you look at the number of startups that there are in Israel, numbers in the thousands, probably the tens of thousands by now. If you look at the number of dollars being invested in early-stage companies, I think last year was $8 billion, or something, somewhere between $8 to $10 billion invested last year, just as in early-stage companies. If you look, which Mark alluded to, where the money is coming from, it's coming from everywhere. It's not just VCs anymore. It's, 2 or 3 years ago, the Chinese were dominating. Now the Japanese are getting more involved, but the money is coming from everywhere around the world that wants to make. In fact, if you think about it, the SoftBank Vision Fund, which is largely Saudi money, has dumped a ton of money into Israel. So, the money is coming from everywhere. If you look at the number of multinationals investing in Israel, endless. I saw some number last week, about 130 multinationals have centers now in Israel. If you look at the number of acquisitions by multinationals of every name, starting from Microsoft and going across every big name you could think of. Microsoft has probably done a dozen plus, Cisco a dozen plus, Facebook a dozen plus, onwards, Google a dozen plus number of acquisitions, onward and onward. And, so the numbers are overwhelming of money and interest global coming onto Israeli technologies. And that's just raw, that's just high level, but very, detailed evidence of success.
One more point, Mark.
I would add one more quick comment on it. It's not just purely what we would define as technology. It's in the cloning of fish. It is in a wide range of areas that you would not historically have thought about either as a tech or emerging tech type environment in which are being created, invested in, driven out of the Israeli ecosystem.
Yep. Vanessa, I'm going to ask you a question in a second. I just want to give one more data point on foreign companies in Israel. We produce a database of global companies, public companies, all the ones that were mentioned, but also Asian companies, European countries. And there's actually almost 400 global companies. They're either invested in Israel or they have tech centers or R&D centers. They're not there because they're Zionists. They're there because they want to be a part of the Israeli ecosystem. And with that, I'm going to direct the second question to Vanessa. Vanessa, what are some of the disruptive tech sectors that Israeli entrepreneurs excel in? And we'll get to the secrets, what does it come from, but I'll let you start with that.
Sure. I think more traditionally, maybe over the past 5-10 years, the emphasis has been on software. It's been on cybersecurity. A lot of this comes out of intelligence programs in the military, like a 8200. As early stage investors, we're obviously looking for what we think is going to be amazing and cool and being acquired in 3 to 5 to 7 years, not what's being acquired now. As one early stage investor friend in Israel said, when your taxi driver tells you that he's also investing in cyber, you know it's the time to move on and get out. So for us as impact investors, we're looking specifically for early stage investments that have every potential to make the same amount of money as other venture capital companies, but have quantifiable, measurable impact across climate change, environment, health access, and food security. Or food security, we think of how do we feed 10 billion people in 2050. Because the way we're doing it now won't get us there. So for us, we look at this universe of 6,500 startups in Israel. We're tracking them in a database. About 40% of Israeli startups, or about 2,500, are in what we see as high impact sectors. So this is agricultural technology with 600 companies, clean tech 500, medical devices and digital health both with 500, food tech, water tech with 250 each. And our job as impact investors is to track these companies, find which of these are in our stage, which are about 700 companies, and of those, find the 12 best for our new fund that we think will make outsized impact in addition to financial return. So for us, the sectors that we're particularly excited about right now are really ag tech and food tech, where we see the most promise. This has been a function, I think, of advances in computational biology, synthetic biology, bioinformatics, nanotechnology, where scientists are increasingly manipulating cells, bacteria, fungi to grow clean meat, to develop textiles out of algae, to map and analyze our gut bacteria and how it influences our health and cognitive status, on and on.
So I would just say, because yes, she's mentioned all these sectors, and they're all, you don't traditionally think of it, but the funny thing is Israel's been great at these sectors for a long time. And I'll just, for example, in sustained impact investing in the solar field, there's a company, SolarEdge, which has been around for a while, but it's a world leader in module level electronics that go into solar panels. And there's another company in Israel called Tiger Electronics that's trying to compete with SolarEdge, which is not easy. Or MAT, which I'm involved in, is the global leader in geothermal, and it's became the global leader because they developed a more efficient process of getting the heat out of the earth, and instead of just selling the product, they decided to build power plants around the world. In ag tech, there's a company in Tafim, which was bought by Chem Mexico, but for billions and millions of dollars, which developed drip irrigation and is the world leader in irrigation technology. So, we all know about security, we all know about common infrastructure, which is where I made my life in the 90s. But Israel has been doing all this stuff for a long time, and it just keeps getting better and more cutting edge.
So, and by the way, when Netafim was bought by Mexichem,
Chemex, but yes.
It's Mexichem, and just rebranded, actually. The company is transforming itself, and Israel is now the center of their R&D. They used to just manufacture PVC pipes, and now they're moving up the value chain because of the Israeli acquisition, and Israel is at the center, a Mexican pipe manufacturer. And so this is how investing in Israel is changing multinational companies. But now to the title of our talk, and really at the heart of it. Historically, Israeli startups would often sell out to foreign companies at a relatively early stage, or they wouldn't go public, or they'd go public and get acquired. We've seen a sea change over the last 10 years, but particularly the last 5 years, of Israeli companies being able to scale up, to grow, and either be sold at much higher levels to foreign multinationals, where when they do acquire them, Israel has to be part of that company's strategy. It's not like selling Waze to Google and then it all goes to Silicon Valley. Now these companies have to be in Israel. And it's been proven, and it's part of the Israeli government strategy to help these companies grow bigger, longer in Israel because that contributes more to the Israeli economy. And so what does it mean to scale up? Why is it important for the Israeli economy? I'm going to start with Mark, and we'll see who else has something to say.
Sure. So if we start from what the value to the Israeli economy itself is look, it comes down to jobs, and it comes down to spending by the companies. The reality is if you build up a small company and you sell it basically for the intellectual property, then it's possible, likely, that intellectual property will be moved out of Israel and the people will be moved out of Israel depending upon the acquirer. If it's an acquirer that already has a large development organization in Israel, they'll incorporate it in, but often as not, pieces of that will move overseas and Israel doesn't get the long-term benefit out of it. The issue is, obviously, the bigger they are, the more they are doing within Israel as more of the structure of the businesses in Israel, the better the opportunity that is going to stay within the Israeli ecosystem and Israeli economy. Now, that's not perfect because you're talking about the Israeli market is still comparatively small versus the rest of the world, and therefore you need to become a company that's not just selling in Israel, but is selling on a global basis. And therefore, the discussions that we've sat in on with people looking at these types of approaches is, when do you move your management? Do you move parts of your management into the United States so that you can have a better understanding of how the world works, et cetera, et cetera? And so there's a lot of give and take that needs to occur. But the reality is, if the approach is simply Israel is going to be an engine that every couple of years a group of guys creates a company and sells it and then goes and creates the next one, it has a limited long-term effect on the Israeli economy as it matures beyond what it is today. And therefore, there is an importance to these companies being seated in Israel and being located in Israel, and that the world recognizes that these are companies that are Israeli companies delivering the technology. How often do you hear in the BDS discussion when people bring up, do you know the stent was created in Israel, this was created? Does that mean you're not going to use a stent? Oh, no. The reality is very different if that technology is coming from Israel.
Do you want to add anything?
A lot. No. So I say, because
there's more questions.
No. But he hit it on the head. But so scaling is really hard, and the urge to sell at an early stage for an outrageous amount of money is really hard to resist, and it still happens because you have VCs who invest and they have duties to their investors, and if you can get an exit in 3 to 5 years, there's no reason why they shouldn't. You have CEOs and employees whose life depends. These are life-changing events that happen. Gee, I started a company 3 years later. Someone's offering me $250 million and I have no revenue. I'd have to be nuts not to sell the company. So it's very understandable. And scaling is hard because when you scale a company globally, I saw part of that at SodaStream. You see it at Ormat, where you're in hundreds of countries. It's not like, all right, we'll open an office there, we'll open an office there. It's A to Z in terms of internal processes, internal organizations. Where do you put people? How do you manage people? How do you balance management between foreign management and domestic management? Because you need a broad culture. It's how do you're talking about ERP systems that are global, financial systems that are global. You're talking about logistics that are global. Scaling a company to be truly global is really, really, really hard. And it doesn't always work. There's process risk and there's execution risk. You can screw it up pretty easily. So it's every company goes through these decisions all the time. Do we grow? Do we sell? How quickly do we grow? And I will say, we'll get to some of this later, when it comes to Israeli companies scaling, it's also the hardest part is management. How you scale an Israeli company to be a global company and bring in what I'll call non-Israeli management truly as partners in the senior level. But scaling is hard. And it just doesn't happen, which is why the urge to sell, particularly for outrageous values, when you pre-revenue, $200 million pre-revenue, great, I'm selling.
Okay, well, you've already delved deep into the next 2 or 3 questions,
sorry.
but I want to, and I'll get to you in a second.
That's the risk of giving us the questions
I
in
understand.
advance.
It's true. But I think I want to pick up on what Stanley said to reinforce something. Scaling is hard. Being a global company is hard. But there are over 130 Israeli public companies. These are companies that chose not to sell out, but to grow as Israeli companies that are listed on major stock exchange in Tel Aviv, in New York, in London, that are suitable for investment. All these companies, despite all the challenges, have succeeded. And in the tech space alone, there's almost 60 of these companies that are big enough to be included in our tech index, for example. And the best part about it is that for many of these companies, going public hasn't been the end state. They've been acquired as public companies. Mobileye could have sold out many, many times before 2017, and they had many offers. They decided to go public in 2014. They grew as a public company, and then Intel came and bought them as a public company on the New York Stock Exchange for what was Intel's largest ever acquisition and Israel's largest acquisition, more than $15 billion. And Intel was one of the first global multinationals established in Israel, way back in the 70s. But now, because of the Mobileye acquisition, and because they bought a company that had already scaled up, Jerusalem, Israel, is the center for Intel's global autonomous driving and IoT activities. That is the difference and the benefit to Israel of companies scaling up and then being acquired. We have data, for example, of the public companies that have exited from our index since 2017. The returns are there. The numbers are there. I'm happy to share it with everyone at a future. There's more value, there's more contribution. So it is hard, but more and more Israeli entrepreneurs are willing to make that decision, and hopefully some of them will be in Vanessa's portfolio soon. So we've already touched on some of the challenges. Some are universal. It's hard to scale whether you're a company in Singapore or Tel Aviv or San Francisco, but some are uniquely Israeli, and I know you have some thoughts on that.
Absolutely. This is one of the big questions that we're looking at, obviously, when we're meeting with the 3 to 4 companies that come in on a daily basis to sort of pitch us. And I want to set the stage a little bit because we talk about scale and what does that mean for us, early stage entrepreneurs, when people are coming with maybe 2 people and an idea and maybe a pilot partner and this is it. We would be thrilled for 250 million exit. Sort of that's the target zone. So we're investing at a stage when companies are $5 million. So we're buying a chunk of that company then. So there's a huge range between that $5 million and Mobileye for 15 billion. So that's the range that we're looking at. Stephen, which question were we on? What are the challenges,
It's the difference. So we're going to get to what the secret sauce is in Israel, but I know that you had and Stanley had sort of, what are the differences between? So if you have more to contribute, great. If not, Stanley is ready to talk.
The biggest challenge, absolutely, in Israel is that we are amazing at product, we're amazing at technology, we have the highest number of researchers and PhDs per capita. We're very not amazing at the commercialization and the go-to-market. It's very hard from a market of 8 million people to understand how the world works in multi-billion, trillion-dollar markets, other places in the world. This is particularly acute in industries that are idiosyncratic. Think about selling in healthcare system in US that doesn't make sense at all to an Israeli entrepreneur. To sell anything that's B2G, to sell to governments is very idiosyncratic. So it's never the challenge of the product. We have amazing product, we have an amazing technology. It's how do I actually take this and scale a sales team and management, to Stanley's point, to be able to sell this abroad. The one flip side of this that we do have in Israel, Mark alluded to this, entrepreneurs need to be thinking about global markets for day one. No one is interested in creating a market locally for Israel. Even if you're piloting with an Israeli partner, people aren't interested. When you get to the US, they'll say, okay, great, that's not relevant, now pilot with someone here. So from day one, the companies need to be addressing global markets and global audiences. The flip side on that is that, we talked about the 300 plus multinational companies that have scouting and R&D presences in Israel. it's amazing to see the companies that we're working with, before they've received any outside funding, are working with the world's largest corporates to help them solve their challenges that they're having in terms of sustainability, in terms of making their products healthier. So for these companies to be able to be piloting from day one and establishing product market fit with these corporates is what can allow them to make that leap and have that skill.
I would just reiterate that the key thing, when you scale a company globally, you have a couple of steps. One is you open up a couple of sales offices and you sell the product overseas. And that's sort of easy because you have logistics, you have ERP systems, you have logistic companies that can do that. So yeah, that's doable. But the key when it comes down to becoming a truly global company is management. You really have to have a management culture that embraces it and that allows in outside to turn a company from an Israeli company to an Israeli company doing business overseas to being a truly, truly global company. And that's extremely rare and extremely hard to do.
In fact, I'd add one more point. What I've seen is that often you'll start a company, you'll build it to a size, you sell it, you have money in your pocket, so your fear of being worth nothing if the second one comes along, you have a little more sense of comfort in terms of building it, but you also learn more about the processes. And so sometimes what you're seeing is you're seeing the ones that build the bigger and bigger ones are the guys who've been through the process before. But I would agree with all the other speakers. The reality is it's a very different culture to selling on a global basis and dealing with different countries and different cultures than selling in Israel. Okay, it's different, and it's something that either needs to be learned or it's something that needs to be acquired by bringing in outside talent.
Yeah, I think, and this is a statement and a question, because there is something that's changed, because some of a company like Wix was founded by entrepreneurs that had already built a company, sold it, and then they made a conscious decision together with their venture investors, no, we do not want to sell out. We do want to go public. We do want to grow. And that's a very good thing for investors, because there's a common statement out there now, all the returns are in early stage, or all the returns are in the private markets. You don't have returns in the public market. But the success of companies like Wix, of Mellanox, of Checkpoint, of Mobileye before it was taken over, is that there are returns in the public market. And I think there's a real demonstration effect that some Israeli companies have done that entrepreneurs now say, many say, I want to be like Waze and sell out early, but others say, I want to be like Wix and go the distance. And I don't know if someone wants to add anything.
I would just say you did touch on one thing that's interesting. There is a much, I don't know the right word, not reluctance. People are just not going public as often, as quickly. In the 90s, you would go public with a $100 million market cap, you'd have $35 million revenue, you go public, and it was the initial stage of technology, and you'd have dozens and dozens and dozens of Israeli companies going public at the time. Now, because there's so much private money, companies are reluctant to go public, and the public gives you, if you are public, everything's under a microscope, but it does give you a lot of advantages towards globalizing, because as a public company, it's easier to make acquisitions, it's at times easier to raise money, it's easier to become a global company. But there is a real reluctance, particularly in the tech as opposed to the biotech sector, where they'll go public as fast as they can. There's a reluctance to go public, and I think that's a bit of an impediment to becoming globalized.
And it has Sarbanes-Oxley affected it as well.
A lot of things
the
affect,
hurdles, and the availability of lots of cheap VC. And what we don't know, and this is a question we can all discuss, is whether the last week and a half's market movement is going, and some of the debacles of SoftBank and WeWork are going to affect the culture and the willingness of VCs, and maybe you'll get better prices. So I don't know the answer to that. I don't know if you have any views on whether we're going to have a repricing.
I hope that we have a repricing. We're at early stage, we're at seed stage specifically because we find the valuations are that much more reasonable compared to Silicon Valley, compared to New York. I think the entire startup ecosystem could benefit from a repricing and realignment of valuations and expectations. For us, we're firmly at seed stage because that's where the best deals are and the best valuations are. At that point, companies are still shopping locally for investors, so they stay in Israel, they don't get on a plane necessarily. By the time they go to Series A, they're competing with companies, in Silicon Valley, in New York, traveling there, and the valuations get artificially sort of popped up to those levels. I was going to make one more point that I thought was interesting, just looking at a bit of data before the panel, and the number of, between sort of 2015 and now, 5 years ago, the number of early stage rounds and the amount of capital going in those early stage rounds has stayed about flat in between 2015 and now. What's interesting is the number in sort of, I wouldn't even call it late stage, this is still sort of Series B, Series C, has grown from $2 billion annually in 2015 to $5 billion annually in 2020. So we are seeing more money go in at later stages. To Stanley's point, it's hard to know how much of that is market cycle and how much of that is genuinely that Israeli companies are maturing, are having management that are capable of growing companies for a longer period.
So before we shift gears a little bit and talk about the path toward investment and how you invest, would any of you want to add anything else about scaling up and the challenges and how this may change?
I guess having built a very successful software company earlier in my life, and having sold it, it's an interesting question, and even the sale issue is an interesting question. And it is a tough one to decide what to do, especially when elephants are entering your market space. Of do you continue to drive, or do you decide to sell at that point? So it is a moment in time in your life that is very difficult, to make that decision, and decide retroactively, was it a good one or a bad one? You just never know. So I can feel for any one of those startup management teams that is sitting there with a whole chunk of money sitting in front of them. What do they do, and what do they make the decision on? But I do agree. I think we are seeing a maturation in the market, and I think it's also a fact that there's a maturation in the Israeli economy in terms of the perception of what companies should do and where. If you look at the Israeli investments, which are done predominantly by insurance companies and other funds of that form, they've had to move much more globally because of the money under management. So even their perception is more of a global world. And so I think it's starting to percolate through the mindset of the Israeli startup world and beyond, that you really you can consider, and you need to become an even potentially a bigger company. But there are trade-offs within this. In terms of the question of pricing, I've sat in a lot of panels recently from different industry experts, for lack of a better word, on the startup world, and there is a level of concern over the pricing of where, because the problem you run into is if the numbers run up too high too quickly in terms of the perceived value of a company, you end up with what's called a down round at some point, potentially, in which everyone has to take a haircut on what they thought they were getting the value of the company, whether that is in a later investment or worse, in a sale of the business. And so there is some level of concern even before the recent market turmoil that related to whether or not the startup world was starting to get ahead of their skis, no less whether the public markets were getting ahead of their skis. It was purely a perception within the private markets. And so, I think there is some sense to that. Whether that's what really happens now really depends on so many factors that are on a local Israeli basis and a global basis.
We're going to talk, I would imagine a few of you are here to learn about how to invest in Israel, what are the options, what are the ways. Before we do, I just want to reinforce a point that I started with, which is anyone who's here at AIPAC Policy Conference is here to support Israel. The focus of AIPAC is primarily political, but all of our endowments, all of our personal investments are a way to support Israel too. By investing in Israel, you are literally providing an antidote to the D in BDS. The opposite of divestment is investment. And I want to urge you, as you think about what you're learning about Israel's tech ecosystem, what you're learning about Israel's economy, that when you go back to your communities and think about your communal endowments or your retirement funds or your personal investments, if Israel's part of your focus, then it should be part of your portfolio. With that, I want to ask the panelists to share a few insights on the different ways that one could invest in Israel. This is not investment advice. Consult your investment advisor. Past performance is no guarantee of future returns. And the rest of the disclaimers are scrolling down the imaginary screen.
So I'll be the nice guy up here and say, buy his ETF, invest in her venture fund, and you'll make a lot of money. There you go.
But that's not.
And I'm not a broker. I don't get paid for still doing this. But by the way, I don't know about the venture fund. The track record of the ETF has actually been quite good. And you can look, I'm sure he can give you a bunch of Israeli software companies that trade publicly that also you'll make a lot of money. There's a lot of money to be made in publicly traded securities. On a personal level, I like to buy turnarounds, which are down and out companies, and they're usually down for a reason. So the around doesn't always around. But when it does, but when it does, it does. I'll just get back to one thing you said before. Last week was a valuation resetter, and it's hard to tell what the long-term impact is, and becoming a bit political, it was not only coronavirus. I think there was a growing realization that there is a possibility that we have a President Sanders, I'm not supposed to name names, I'm not talking about Israel, I'm talking about socialism, and that you have a guy who wants to reset the entire American economy. And that's something to be concerned about, nothing to do with politics or Israel. I'm just talking about economic policy. And you can see.
Vanessa?
Okay.
That was enough to make Stephen uncomfortable.
Yes. I understand.
Going back a little bit to your question of communal funds, I just want to make a plug for the concept generally of impact investing. This is the idea that you can make your investments with equivalent financial return to whatever traditional asset class you're in, while still having positive measurable impact across the space. So, I think Blue Star is a great example of this in the public equities market. You're making just as much money as you would in another index fund, while also supporting growth of Israeli companies. This is sort of my slice of the investment world. I'm happy to have more conversations about that, but there are lots of different ways across asset classes, real estate, fixed income, obviously venture capital, private equity, of ways that you can be investing assets in a way that is aligned with your personal mission and values, or with your organizations. I think it's increasingly, whether it's federation endowments or foundations, are seeing that the endowment dollars that they have under management, when they actually dig in and see what's there, may be invested far more in Arab countries that are in conflict with Israel, or companies engaging in child labor. So it's about unpacking what you're actually invested in, to make sure that those companies are actually generating the social environmental benefit and changing the world in the way you would want to leave for your children.
I did a couple of the points, and I won't go into the politics.
Thank you.
Even though I agree.
Thank you.
So a couple things. The first is, it really creates an interesting psychological situation when you invest in an Israeli company, because it builds a relationship between you and the country that you may not have had before. Even if you go to Israel all the time and you have family that's there, or you have kids that are there, it does create a different mindset of it when you have put your hard-earned dollars into that economy and you're monitoring that. And so there's a lot more other benefits to that from a psychological point of view, by making those investments. The other thing is, there's lots of ways to do it. You can go downstairs to the what do they call it down?
The village.
The village. There are companies there. There are funds that are there. There are lots of ways of doing this. My recommendation is go with what you know and what you're comfortable with anything that you do, because that's where you have your best point of understanding of it. Okay, and so unpack it is the right answer. Unpack whether it is a business or a fund or whatever, because you need to feel comfortable with what you're doing, and that you understand what it means and what it is and what the value is that's being created. But there's lots of ways to do this, It really is, and it's become easier and easier because there are more different types of funds that are available out there than there have been in the past, or ways to be able to invest. And I leave it up to you to pick the way that makes the most sense for you.
Full disclosure, I never physically met Mark or Vanessa before this morning, but I have to just reinforce what they said and encapsulate it before we go to Q&A. How many of you have heard of the term double bottom line investing? Double bottom line investing is exactly what Vanessa was talking about. It's an investment that has some connection to your values, but is also a good investment. I believe that investing in Israel, in any of the ways one can invest in Israel, is a triple bottom line investment. And what Mark just said encapsulates it. One, first and foremost, it's a good investment. We have the data that proves that investing in Israel has outperformed all other international non-US investments over the past 5 and 10 years. Two, as you can tell, it helps Israel. It helps Israel's economy, it helps Israel's companies. That's the second bottom line. But the third bottom line is what Mark just said. It changes your relationship with Israel. If you're involved in a community that has an endowment or a federation, of course you're giving money to support Israel. Usually it's about a third of federation budgets is supporting programs for Israel. But as Vanessa said, you ask your federation. Most likely your federation has more money invested in the foes of Israel, Malaysia, Indonesia, Qatar, than it does in Israel. And that should not stand. And the triple bottom line is changing that relationship while finding a positive way to counter BDS. So that's the third bottom line and the end of my soapbox speech. And the young lady in the front has been smiling the nicest, so she gets to go first. Please.
Hi, thank you all so much for speaking. My name is Elka Wiesenberg, and my question is...
And where are you from?
I'm from Chicago.
Okay.
Mr. Schoenfeld mentioned that one of the ways to counter BDS and to support Israel is obviously investing, but as a student leader at Yeshiva University, I was wondering what college students can do to help.
Okay. So whether you go to Yeshiva University or Yale University or a public university, every university has an endowment. Yeshiva University and other Jewish-affiliated universities, the students, first and foremost, unlike students at other campuses that are saying you should divest from Israel, you should be starting a movement on your campus saying, talking to the administration of the school and say, is the Yeshiva University Endowment investing in Israel? Yeshiva has an entrepreneurship center in Israel. Is the endowment investing in it? That's one. Two, I think one of you is a finance student. There's groups. There's groups of students who are interested in business, entrepreneurship, internships, and so on. Many of them are already connected to Israel, like Tamid, but there's always room for more. And Tamid has been in a fantastic development over the past 10 years. There's many ways for students on campuses to get engaged. And the best part about it is it's also good for your career. The more you learn about Israeli tech and Israeli innovation, the more opportunities and doors might open.
At some point you mentioned that there comes a pivotal decision where a company has either to sell or choose to growth. And in the case of Israel, is there anything that the government or the Israeli banks are doing to incentivize their local enterprises to growth instead of sell?
Great question. The government in Israel does a lot and does it very well in fostering early stage. But I don't think there's a policy about preventing people to sell. But I know, Vanessa, you've talked, Israeli companies not only qualify for Israeli government grants, but even European grants and others. So.
Yeah, absolutely. So the Innovation Authority in Israel, they rebranded a few years ago from the Chief Scientist Office, so you may know it by that name. They invest about $400 million a year in early stage startups. So basically every company that we invest in, it's a given that they're getting a grant from the Israeli Innovation Authority. Their way to disincentivize the company from moving abroad is that they require 4 times what they invested. If the company moves abroad, they require a return of capital of 4x of what they invested initially. The exits are typically big enough. It's not a real disincentive. It's not a real knock to other shareholders. So I don't know that it's that effective in that point.
But if you want to read up on what Israel did in the 90s and continues to do to foster innovation and tech investment and scientific investment, it's really quite a success story.
Yeah.
You don't always associate government involvement in innovation and private sector as going well together or being successful, but in Israel it actually has.
So, but actually the chief scientists, the innovation, it's actually become a little bit of a political football in Israel lately because they've shifted a lot of the investment to earlier stage companies from what I would call existing tech, I don't want to use the giants, but existing tech companies who had relied on their R&D subsidies and who employed hundreds and hundreds and hundreds of people. So it's actually become a bit of a political issue in Israel.
It was a policy decision that they said companies after a certain point of time can fend for themselves and let's start the earth.
Yeah.
Like other things, we could agree to disagree.
Yes, but I'm just saying it. Go ahead.
Yeah.
Yes, and you know, to Stephen's point, increasingly we're seeing that the European Union is funding a lot of our startups in Israel that have strong environmental social impact. We have multiple of our companies, when they were, you know, $5 million valuation, won 2 million euros, $2.2 million from the European Union. This is free money, non-dilutive, so overnight as shareholders, we have a 40% bump in the value of the company.
So using your own data that you shared with us, 7 to 8 billion in new investments flowing in Israel every year, 300 global companies looking for acquisitions, IP, Israeli products. How come that the investment community and the corporate leadership community is so remarkably quiet in the face of BDS and, you know, politicians who, you know, promote illegitimacy of Israel and so forth and so on. If you're looking to profit from Israel, if you have fiduciary responsibility to your shareholders, to your investors, shouldn't you be pushing back?
I said it earlier that, you know, the 400 foreign companies that are in Israel are not there because they're Zionists. They're there because they want to tap into Israel's brains. There's a group that is here at the conference and actually sprung out of the book Startup Nation, called Startup Nation Central, and they're basically acting as a tour guide for foreign multinationals to enter the Israeli ecosystem. So my belief is that companies are there because they want to be there. I don't know if anyone has a discordant view.
So what I've seen is they aren't expressly pushing back on people who are making BDS comments or whatever. They're just doing their business the way they want to do it and trying to ignore the political ramifications or whatever. But it does get humorous at times. I was at the RSA cybersecurity conference last week in California. So much of the presentations were given by people with Israeli accents. It was, you know, you walk around the thing, you'd think you were in Israel almost. And you could be talking about almost any multinational that these people were employed by. So they are doing it, but they're quiet about it. I don't think they're likely to become more visible about this for obvious political reasons. They don't want to be in the crosshairs one way or the other or be part of a political football. And whether that's good or not is a separate conversation.
The bigger issue has been companies that operate in Judea and Samaria or the Shtachim or the territories or whatever you want to call it. When SodaStream had their plan on the West Bank, there was all sorts of uproars and talks of boycotts. So we built a new plant in the Negev, so we no longer employ Palestinians, although we got permits for some to come back, but we now employ largely Bedouins, and the plant is being doubled in size, but it's not a Palestinian people getting the work. Another example is there's a cosmetics company, Ahava, which was also in the West Bank, and when it was owned by Israelis, there were boycotts all over the place. They sold the company to the Chinese. Same company, same place, same management, no more boycotts, no more protests, because it was now owned by Chinese investors. So, as you know, there are still, look, it's an issue in general, but companies that operate in what you use the word Israel proper or pre-67 Israel generally don't have that issue right now.
However, just for us to be aware on the radar screen, in the middle of February, the UN Human Rights Council published a blacklist of Israeli companies that they had been compiling since 2016. Israeli companies and about 20 foreign companies that they say support the occupation / operate in settlements. The list of Israeli companies was the blue chips of Israel. Why? Because there's a Bank Ha'Poalim ATM in the settlements, okay? And there's a Bank Leumi branch in Ariel. And you can go down. And the big supermarket chains operate in the West Bank. This is a threat if it goes further. And this is, to me, one more reason why the pro-Israel community needs to literally invest in the companies that our enemies are trying to blacklist. Next set of questions, sir.
My question is about risk, which is something I think we'd all like to hear a lot about, and the perceived risks versus the actual risks in investing in Israel. And then if you could comment on the differences specifically on the risks in investing in venture capital versus publicly traded Israeli equities, that would be great.
It's very easy in a bullish market to hype the exits from VC and ignore the unsuccessful companies. I think it's a very important thing, and it touches on what Mark said, which is do your due diligence with private investments, early stage investments. There's a reason why they're private, and there tends to be riskier. On the other side, with public investments, whether it's fixed income or equities, it's not always a one-way trip positively, but at least there's data and you could literally measure the risk and return. I don't know if anyone wants to add to that.
Yeah, I'll say the obvious. Everything is risky. Companies have to execute, companies have to perform, whether they're early stage companies, whether they're public companies who live and die by quarterly returns. You live at a risky competitive business environment, and you live in risky and competitive markets. So whatever you invest in, just make sure that you do your homework, you do your due diligence, you have an understanding of what you're buying. And yes, markets don't always go up. We've learned that in a very, very, very abrupt way the last week. Markets go down, and when they go down very rapidly, very rapidly and very harshly.
Okay,
I would add, speaking specifically on venture capital, on average, it's a terrible industry and you should not put your money in it. It's barely outperformed the public equities over the past 20 years, and that's to have your money locked up for 10 years, even 20 with some funds. The one thing to be aware of in venture capital is that the top quartile of managers dramatically outperform everyone else and make gobs and gobs of money. So within that asset class, it's nothing to be proud of to be average. It's embarrassing. You want to make sure that you're doing diligence and finding the right managers that can do that for you.
That's a great answer.
My question's about the growth of capital in Israel over the past 10 years. So as we've seen international investors like Greylock and Sequoia, I know Insight just opened an office in Israel. Have we seen those big funds enter the Israeli ecosystem? Is there any concern that they are cannibalizing on the returns that were previously received by Israeli LPs and angel investors?
Great question. Is the entry, and by the way, it's not the first time that the big global VCs entered Israel. They've entered and they've withdrawn and they've entered. But is the entry of the big VCs back into Israel going to, inflate valuations or change things in any way?
So the interesting question is, why are they back in Israel? And I think the answer is people are looking for where there's assets they can invest in. Everyone chases after where the returns are going to be and where the quality companies are going to be. So it's a commentary by itself that they're in the markets and they're investing of the quality of the Israeli technology ecosystem, or it's not even technology, non-technology ecosystem, that they're in the markets there. But look, any market in which you throw a lot of money at it from a lot of different people does make you a little more frothy in terms of the values and the fight-offs of who's going to invest and all the rest of it. So it's, again, like everything else, it's all about you doing the research to understand what your decision-making processes are and what you do with your money.
Good afternoon. My name is Rhonda Binda. I'm with the Mission Critical Institute for Cybersecurity. We were also at RSA. And I'm from New York, and we just launched a partnership with Jerusalem Venture Partners around cybersecurity with the New York EDC. Mm-hmm. And I just wanted to hear more about what you're seeing around that, because there's a big skills gap here in the US, and what can we do further to partner with Israel?
But skills gap in cyber or skills?
In cyber.
In cyber, great, okay.
So the short answer is there always is.
Yeah.
There's a lot that's being created there, and that's why there's so many companies that are out there looking for intellectual property. It's a complex question, cybersecurity, as was in the keynote at the conference, of how this stuff gets solved. Is it people? Is it technology? Is it combinations, et cetera? That's probably something for a longer conversation.
I wanted to flip the conversation on its head. We talked about money flowing into Israel as a venture investment. As a startup founder with 2 years of proceed capital, does it make sense to bring the company to Israel to do deployments? We do scooter management software, a SaaS platform, and so forth. There's a lot of scooter issues, with riding on the sidewalks and so forth. Does it make sense to come with technology to Israel? What are the benefits to that?
It's actually a great question, and I'm gonna make a broad statement. The last question is an amazing question. I'll tell you why. That tells you how far Israel has come in this space. The fact that entrepreneurs in the United States are thinking of going to Israel because it's either a better ecosystem or the VCs are there, that is an exclamation point on where Israel has come. And because we're out of time, and you're all welcome to come up and talk with us, and we're all around for much of the conference, I just want to thank you for filling this room. I want you to think of all the great things that Israel's achieving in the world despite the neighborhood it lives in. And as much as the world is scary for Israel in a geopolitical sense, it's actually getting better. So thank you very much for being part of this.
We would be pleased to send a complimentary DVD of this program to anyone who wishes to support JBS with a tax-deductible gift of $36, double high or more. Simply visit the JBS website at jbstv.org and click on the Donate button to make a donation by PayPal or your credit card. And please indicate the program for which you would like a DVD. Or you can send your tax-deductible check to JBS, P.O. Box 180, Riverdale Station, Bronx, New York, 10471. And again, please remember to indicate which program you would like to receive with our compliments. And we thank you for your kind support.